right, let's try this again. Welcome, everybody, to another eye-opener. This is Market Wealth Day, which quick little video chats that we do with top traders. And we have got Wendy Kirkland here with us. Let me go over the rules of engagement here for everybody. So this is a live recording of these sessions. We love doing the live stuff because uh, we want to interact with you guys. There's a chat window there. I'm going to do my absolute best to pay attention to that and answer all the questions that you guys have, because that's one of the beauties about being live, is being able to talk to you guys and see what's important to you. So go ahead and shoot questions in there. If I don't respond right away, it's because I'm fully engaged in what we're talking about and probably clicking about 50 buttons in the background here. But I will try to get to every question that we have. We've got a lot to cover here. I'm sure a lot of you are pretty familiar with Wendy, and if you get a chance, just let me know if you guys are currently using one of Wendy's services now. Just throw a message in the chat or anything you can do to let me know that that's going on, because I'd love to see how many people are familiar with this. We are really excited about the stuff that she does. One of the things that I like best about you, Wendy, is that you simplify things and you have this kind of very comfortable approach. For me, as a relatively amateur trader, I've been around trading for a long time, but actually trading myself is something I'm always learning about. And you just make it comfortable to get in there. You explain how to do it in a really smart way. And it's just it's encouraging and supporting, and that's really beautiful. So it's great to have you here, Wendy. We're so glad you could join us.
Thank you. Thank you. I am so pleased and happy to be here, and I appreciate your sweet comments. That very, very nice. That um, as far as me and trading, what I feel is, if you want to say my advantage or connection to people, is the fact that I'm just an everyday person. That I am not somebody that has had this huge financial degrees and all of this kind of stuff in that major community, at a brokerage firm or whatever, that um, I, in a sense, taught myself to read the charts. And that makes it easy for me to share that information with other people. It's like, look how this crosses that, and it's it's easy to understand. And I think that is my little niche, is that I'm just kind of normal.
Right. Oh, no, that's completely it. The accessibility is the beautiful thing for me. As I mentioned, I've been doing this for a long time, mainly from a publishing and education side. So I've interacted with so many different trading educators like yourself and gurus. And, all of them have their strengths. And it's really about finding the person that you kind of sync with, that it clicks. And if you find an educator that has something that makes sense to you, that's a great thing. And I just think that for people who are both advanced traders looking to simplify a complex trading approach, or for somebody who's new, it just kind of needs that kind of assurance as they get started. You just make that happen for everyone. A lot of other traders, and it's only because they came from that financial background, they came from a big firm, and I love them because they know kind of what's going on behind the scenes. There's a lot of value in that. But what will happen, and I've caught myself doing this, my wife tells me, she calls it mansplaining, but what I'll do is I'll explain something way more than the audience can understand. I'll start using technical words and things, we'll be trying to fix something and I'll just over explain it. She'll just, hey, come on, just, yeah, I don't know half of what you just mentioned. I didn't mean to do it, but I have to be mindful. And you're just great at that, because I think that background that you have makes it easy for you to kind of open the door for other people to get into trading and really enjoy it and get the benefit out of it that you have. So, that's what makes it really exciting. And I love the different, very simple, the group of indicators that you've used. Super easy to follow. And I know in the daily newsletter, there's always references to, if you want to learn more about it, they can just go and dig deep. It's like, hey, I got it. I can just read the article and get it. Or wait a minute, that didn't make sense. And it's right there. You can click, you go back and you look at your explanation of that indicator, and it just makes sense. So it's really welcoming to everybody. But All right, we want to make sure we keep moving on the
Yep,
topic. I'll
yep,
I'll
yep.
I'll
I was gonna
chat
say we get
forever.
going, I could start talking about patterns.
Yeah, me too. So what we want to know today is we want to know what you're looking at in the market. But hang on for 1 second. I just need somebody to shoot me a chat message. I want to make sure it's working. If any of you guys can, do something, raise a hand, you hit the chat button, send me a hello. Oh, there we go. I see some hands going up. Hoping that everybody can use the chat. Oh, wait, hang on. There we go. I didn't have the button set. So fix that. Now I can see some chats. If you do that. Thank you for raising the hands and cooperating with me there. I think we're all good now. Ah, there we go. Perfect. Perfect. Yeah, there's all kinds of people chiming in. Awesome. Great. So, Wendy, back to what we are here for today, and that is to have you kind of give us an overview of what you're seeing in this market madness. This volatility is just out of world, and it's unprecedented. This doesn't happen very often. So, really interested in kind of what's got your attention right now.
And truly, that is what I'm seeing is the volatility is so wild that here we went through a period where we had 9 positive days. That was kind of record breaking. And yet, even that was tough because it would start up, it would gap up, and then it would go up and down and up and down and up and down and maybe drop almost to the zero line. And you think, oh, what in the world, even if you'd gotten into something at that point, you would have decreased your, premium would have decreased. And then maybe by the end of the day, it's back up to the level where it started or maybe a little bit higher. And that is just the volatility is wild, and then all of a sudden after those days, now we have had several negative days where you have big drops and all kinds of swings. So
Yeah, and when I look at it and been doing a lot of reading about this. One of the things that I've seen is you have to be mindful of the time frame. Think of it as cropping a picture. Where are you? What are you looking at in the market? And if we were comfortable a month or two ago looking at daily charts and everything else. Now you need to back up, maybe look at a weekly chart, and then it starts to take a little bit of the insanity, the noise out of it, and you can see the bigger trend. And that time frame becomes really important. But to your point too, these swings are not for the faint of heart. You have
yeah,
to
no,
understand your trading style, your risk tolerance. Who are you as a trader? Yeah. And if you know that, hey, this is something I am comfortable going in because there are opportunities in here, only if that's your trading comfort zone, right? And if it's not, there's no problem staying on the sideline.
that I was just going to
Absolutely
make
not.
sure that that was said that there can be times when it is so volatile that the smartest thing to do is just sit on the side. And you can do other things. You can study, you can read, you can learn more about the indicators, all of that, and have it be a important learning time and watch the market, but don't get in where then all of a sudden you're concerned about uh, losing money or whatever.
Exactly. Right. So really quick, and I love just talking to pros like yourself how you learned, and we know a lot about your story about how you kind of just came to it, and out of a life challenge. But give me just one of the big light bulbs that went off. Where was the epiphany? So if somebody just started trading recently and they walked into this, oh my gosh, I just can't even imagine trying to like not be overwhelmed by what's going on. So interested in maybe an epiphany that you had when you were starting out to trade.
Well, to me, the epiphany was, and it ended up being what I actually teach, is that I realized that when I have my indicators set up the way that they are, 100% of the time, the P3 and P3 and a half patterns are going to play out. One creates the other, and then that one creates the other, and they play out. And so I realized that I could look at any time frame chart, a weekly, a daily, a 60, a 30, a 10-minute, a 5-minute chart. And if I know the P3 patterns, they are going to play out. And I know then what to expect that is going to happen with price. And if it doesn't happen, then I know 100% what's going to happen because the previous pattern is going to go back into the adult stage and go up, I'm not saying up in price, but well, premium price, yes. But, if it's a bearish trade, its price is going to drop, but it's going to go back into that adult stage. And it does
Right.
that so it can conceive the opposite pattern again. It is,
Yeah,
it's just, and that is what I teach. But that is what I found and discovered and saw. And it was like, holy cow, that this
right.
is wild that you can see it on every single chart.
Right, and that was the first time you opened your computer and looked at a chart, right? The very first time all that just happened
Yeah,
automatically. You
yeah.
didn't,
And
I'm
I
kidding, I'm
think,
kidding. I mean, it
I
was
think
more,
for
there was a
me,
lot of going into that before, a lot of research
yeah,
and
no,
learning
I
going
did.
into it.
I did some
Yeah.
reading about the indicators and stuff, but a lot of that felt kind of foreign. But I think for me, the reason that that all fell into place was because of my artist background. I was seeing it
Mhm.
as a picture. It was, it was like art that
Visual, right.
was,
And
yeah,
that's what, is so, again, I was talking about over explaining things and making just, you know, assumptions about what whoever you're talking to understands. Charts are numbers, they are data, and it's just a visual representation. So it's a great way for a couple things. If you are a visual learner, if you learn from watching things or seeing people do things, charts are brilliant because they take a
right.
bunch of numbers, which if you're not a numbers person, the numbers, just looking at a spreadsheet with numbers on it might be hard to figure out. If you look at that visual chart, all of a sudden it becomes almost three-dimensional. It's like going from UHF to HD. It really opens it all up and you can see it. And but also if you are a numbers person, that makes it very quick. You can see a lot of information in a very quick amount of time. You're more efficient. And we're back to kind of your superpower here. That simplifies things. If you get that quick glimpse and you have a sense of what's going on, or if you have a very consistent visual image, a pattern on the chart, and you see it, you can react a lot quicker. You don't have to do the math in your brain as much to figure it out. So that's what's great. And the P3 is just amazing. I know we've got a lot of information about it available to everybody. So definitely, if you haven't dug into that, I would really encourage you to take advantage of that. When we follow up, we'll send links out to all this stuff. So if we reference anything in here, we'll make sure you guys have a pathway to find out more about it. So, the crazy volatility. So today, we just had the big Fed announcement yesterday that they're going to just hold steady. They're not doing anything crazy. What does that mean to you? How do you act on that information?
Well, I feel like in some ways I'm starting to figure things out a little more, that as far as the news, they put all the troubling news out there, there's going to be all the tariffs and this and that and the other, and everybody gets all upset. And then there's the negotiations that happen and it settles down and becomes more reasonable in a sense. And it's like, oh, that is a different way of a way different than I personally ever do anything, but it's like that's interesting. That is a different way to approach stuff. Is have it be in a sense awful, and then settle down, and then it's like okay, So
The analogy I've been using too is, that you're seeing the sausage being made. We've been so conditioned. All this stuff would happen in back rooms and it wouldn't be out there in front of everybody, which there's a lot of benefit. It just definitely rattles me a little bit to be involved and see all this. Agree with it, disagree it. Let's set that aside. We're traders. We got to be objective,
right,
and we have got to be able to kind of set that aside and see how this is going to impact the market, right? Now all of a sudden every little back and forth is being just podcast across everything, and you're getting dragged through that entire grinder of, hey, maybe the sausage tastes great at the end. We'll find out. You have to be determined. But in the meantime, it is just making a mess all over the floor, right? So we got all kinds of stuff falling all over the place. That's my crazy analogy of all this. But this is on one hand, as I mentioned before, it's tough to learn in this environment, but it's like running with ankle weights. Boy, you're really training hard. You're gonna be able to do it a lot easier when things level off again.
No, that is definitely true. And you look at today is at least when I looked at it a little bit earlier, it looked like it was going to be a bullish open, here
It's
after
yeah, the
the
futures are
Fed
still up
day
this
and all
morning.
of that so,
Yeah. Yeah, no, really good. So, you know, really quick, what's the most important tip that you have for people in a really volatile market? The most like if you had 2 seconds to tell somebody what they need to know to navigate this, what would be the first thing you'd pick?
um I guess I feel like because of the volatility is to enter when you see some strength. For me, that is the strength stage that I teach. But to get in, and then when you earn, um, I don't know, some amount, 25%, 30% or something in a day and a half or something like that, take it. And thank you very, very much. Don't hold on and then the next day have some crazy news thing and down it goes, It's like,
Yeah,
and then you think, oh, now I'm going to have to hold another couple days to get it back up again, maybe. And you're getting
right.
time decay and all of that. It's like, if you earn the profits, thank you very much and take it and move on.
That is one of my toughest challenges as a trader. I have this like chronic optimism. I always think things are going to work out, and I'm notorious. I have a mental limit set for my trades. I'm gonna, if it gets to this point, I'm out no matter what. I'm not going to think about it. And then it'll do something crazy. It'll gap down, and I'll open it up in the morning. It's past my mental limit, but then I'm like, oh well, what does that mean? Well, I've already passed it. Maybe I hang it. My brain starts convincing itself of all kinds of nonsense. Pull the trigger, get out. You set a rule, stick to your rule. That's what you need to do. And when it gets, take the money and run. Right? It's the Steve Miller thing,
Yeah,
right? So let's grab that profit as soon as it's there. And as much as it might sting to see something that was a 40% gain that you locked in, then go up to an 80% gain, it's going to hurt a lot more for that 40% to turn into a negative 80 or a negative 100%,
that is
Uh,
exactly right. And I seldom really look back. I once in a while I see things, but I just truly, when I close a trade and I have a profit, it is like, thank you. I appreciate it so much. And I just move on and
yeah,
don't beat myself up. Why did I do that? Because then you start second guessing yourself in other trades. And
yeah.
then sometimes they hurt you,
Yeah. Oh
So,
no, I got you on that one, man. And I've made that mistake and felt the sting. Hopefully, one of these times I'll sink through my thick skull and I'll learn better. But until then, you just keep going and you get back on the horse. The other thing for me that helps tremendously is before you enter, make sure your position size is appropriate. So
right.
you can't bet the farm on every trade, and you're gonna have some losers. Keep them small, make sure that they don't wipe you out. You got to be alive tomorrow to get back in the market. So if you keep the trade small, all right, it's going to limit your upside. But as you compound, you'll be able to increase that and keep the same allocation of your investment, and that'll help a lot. But uh, walking in the door with only the money in your pocket that you want to leave behind is the right way to do this. Now,
That,
hey, you could walk in and you could walk out with a lot more, but you know exactly what you're going to lose. So, you'll be all right. Well, cool. I'm going to keep moving here. interviews have been a blast. I don't know if anybody else has been logging in for some of the other ones that we're doing. We're going to do these a lot more frequently. I'm shooting for almost every day. Unfortunately, there is life. You know, everybody has a life. I have one. I enjoy it quite a bit, and it's getting. You know, Wendy's from North Carolina. I'm in North Carolina. I know you're traveling right now, but it's getting to be the most beautiful time of the year down here. And,
I
you
know.
know,
Yes.
it's so hard. I love this stuff. I love talking to everybody, but there's so much dragging you outside and to be outdoors. But anyway, let's jump into this. I want everyone to know we're going to do these frequently. Watch your email and watch the website so that you can see the schedule, who we have coming up. We got a lot of fun stuff. Wendy, so I know two things that I want to move on to next. First off, we got a really great opportunity. Before we get any farther, I want to let everybody know we're going to put this up in the chat in a little bit here. There was a great special that got run on your one ticker service just over the last few days. Phenomenal. I hope a lot of people take advantage of it. And it ended last night. This was like a price that we hadn't offered before, and I was really surprised, a little bit shocked. So I reached out and I said, "Hey, can you guys open that up? I just want to be able to give it to the people in the session. If these are people that didn't do it or are just learning about Wendy, they're going to be excited about her services. A lot of arm twisting, a lot of begging and pleading, and just as much to get IT time as anything else. But I made it happen. I extended the discount, so that price is going to be. We're going to share that later. But I know that you mentioned, so keep an eye on the chat box, folks. I'm going to put that up there. I know you mentioned that there were a couple specific charts that you were looking at, and I was hoping that maybe we could pull that stuff up and kind of take a look at it.
That would I can do that. Did want to just mention the service that you were talking about, trades IWM, and we're going to talk about a couple other equities, but they still
Awesome.
trade
Yeah.
my patterns.
Definitely. Yeah, no,
Okay.
that I love that it's focused on the Russell and it exploits kind of the patterns of the small caps. So it's a great program. But I think there's so much out there to look at right now and a lot of things moving. So if you can pull up the ones that you're focused on,
Yeah.
that
Um,
would be great.
and I was going to,
Well,
can you see the screen there now?
we can now we see the
Okay.
pinned screen, so we're all good there.
All right. So I'll look at the charts in just a second, but I wanted to just point out we were talking earlier about the volatility, and this was yesterday. And so you can see like the Dow closed up 284 points, but you can see here it gapped up in the morning and then was up and down, rose, then dropped down here at 2 o'clock before the Fed meeting, and then back and forth, and truly closed about the same point, not much higher. Uh, then here it was pretty much at the open. Again, you can see how the NASDAQ positive, down, negative. That makes it hard to time. That and so this is the point, that is troubling that if you had gotten into a call trade here when it dropped, you probably might have considered selling. That that makes it really, really hard. And so a lot of times then what we need to do is to, if you can be involved during the day, is to step down in the time frame so that uh, maybe you got into a call trade here and then you could have gotten into a put trade when dropped, if you can be involved
Mhm.
during the day. If not, then stand aside and just let it all play out and say, oh, that is really interesting. I see how this pattern did and that, and learn from it, but don't get sucked in and beat yourself up and all of that.
Absolutely no. And if you're getting caught up in the churn, all you're doing is making the brokerage people money. They
That's
make money
right.
on the volume, how many times you trade. To be comfortable stepping back. There's absolutely nothing wrong with that. And for me anyway, I shouldn't. Again, I'm still learning a lot. But when you step back and you watch in those are you're raw, you're all your assumptions have been challenged, they've been opened up, and the benefit of that so many people don't realize, is now you've cracked that shell and you're open. You can look at how to maybe modify things. And it really makes you much more receptive to learning new things. So to step back and really dial into the education and look, it's a great time for that.
Right. And this little carpet that's down here, this green with the symbols, that is saying and suggesting that the market is going to be bullish. So when you're looking at this, Google's going to open up, Amazon's going to open up, Apple's going to open up, and so on. And uh, that was some of the things that I was going to discuss real quick. So I'm going to bring up AMD here, and that's Advanced Micro Devices, AMD. And this was one that I could see was just popping above here, above this pink line, above the 55 EMA. The EMAs were lining up. And when I scroll down here, I can say, oh, yep, it's got a P3 pattern that is starting to play out. And this is looking like it is getting ready to move up. And um, as far as these indicators, the PPO, the ADX, the way things are set up, that's what my books and all teach about, and teach you how to read them, have it share the information very quickly. Um, you don't look at it and say, oh, this line just crossed up, and this is how your eyes take it in, and it shares the information very, very quickly, and tells you the story of what is apt to happen next. So
Yeah.
as far as this
I
particular,
was just gonna
sure.
say the books do a great job of kind of sharing the recipe, really. I mean, you've got the ingredients in front of you, but the way that they all come together to be delicious and create some delicious trades, that's in the books. So definitely, if you haven't done it, again, well, that stuff's available. We'll make that available to you.
Well, cool. And so on this particular trade, I would expect that it's here about 100. I would expect it to go up here about 115, maybe just under that. And then it may pause a little bit, might pull back. But, um, if it was to go up almost $10 in the next day or so, uh, that would be a nice trade. And, would be possible with the recent volatility and all of that. Another one was Amazon, and I think we just saw that on the thing we were just looking at, that it is actually going to be up today. But it is kind of the same, that I expect it to pop up here to about 204, and then it may go back and forth a little bit. It might take a couple days to get up there. And when come down
Uh,
here, it's kind of the same P3 pattern starting to play out. And so I started looking down a list, and they were the first couple on the page, and was like, okay, well, I'll just start right here and mention those.
oh yeah, no, it is great to be able to get this kind of insight. I get up in the morning, I'm like overwhelmed. My brain is like about to explode. I'm looking at every ticker. Start with the headlines. I look at the futures, and then I start crawling in and trying to see where I can spot something. And I feel like I'm in a maze with a flashlight, just looking at one thing at a time. So to have somebody else kind of guide us to some really good opportunities, I mean, that's just such a blessing. It really is. Um, yeah, so love this stuff. I love patterns and the simplicity of this. I have been watching Amazon, but it scared me. I mean, that volatility scared me. So, knowing to kind of look at the different time frames and have that off ramp if I need it, just to stay on the side. That's very helpful.
Yeah, I don't know that I mentioned, but this was a daily chart. So the you can see here. Um, we're kind of looking at patterns based on the daily chart. And if you um, are actively involved and can look, you could step down and look at a little bit lower time frame chart.
Yeah, and everybody, if you're out there, if you have a question, just shoot, go ahead and type it in the chat. Got some great comments from everybody. Appreciate everyone's thank yous and all that for us being here, but there is something, go ahead and plug it in there and we'll do our best to answer it. I will confess I don't know everything. I know that might shock everybody, but Wendy probably knows, but she's probably forgotten more than I know about this stuff. That's for sure. So but yeah, so and the point of these events is to really engage to make this, and this is not going to be the same. So if you're logging in and you're thinking, "Oh, okay, I've been there, done that. These are going to change every episode, every session that we do. It's going to be different stuff, and it's going to be real time about what's going on in the market. So we really want you to kind of, if you enjoy what you're seeing today, I think you're going to enjoy a lot of them. Come back and sign up for some ones in the future. Yeah, so looking at this stuff, Wendy, do you think that taking a trade, the time expectation for your trade? So, if I remember correctly, when you're looking at expirations and you're looking at trades like this, you're looking to give yourself a little bit of a runway for this thing to play out. So, what kind of a time frame for what kind of expiration would you be looking at if you're taking, let's just say, call on Amazon. I'm not saying that you are, but if that was it, where would you put the expiration target?
I often will buy the next monthly expiration option expiration so that could go out. I forget if it's June 20th. But it could be that I would only hold it for 3 or 4 days. But the thing that helps with is there is not a lot of time decay.
And
It
you,
is
yeah,
it
you have
is
more
just
time
a
to,
minute. That's You have more time, but the decay where it drops because of the time decay is really really small. Where if I bought um, tomorrow or next week's expiration, uh, it might triple or as far as the time decay. It happens much, much faster in bigger chunks. It
yep.
drops. So,
Yeah, and I like to. I think a time decay is kind of like the point of no return. As you get closer to expiration, and you're farther and farther away from your target strike, whatever that may be, the point of no return just gets closer and closer. You see it, oh, well, it's never going to make it to that now, or very unlikely anyway, or now it's never going to make it to that, and
right,
you have to be careful because you keep thinking and especially with this wild volatility, oh, it can still recover. There's still time, but that window for it to actually happen gets smaller and small. So yeah, the time decay is a real factor. So giving it the next month expiration, it sounds like a really, really smart way to go about that.
right. And um, it if it did drop a little bit, it would be dropping less, and it gives you more time to have it bounce back again. So I don't know. That
Yeah.
to me, that is just good advice. You know.
Yeah, no, that makes a lot of sense. And it's these are the kind of things that you come up with a trading system, you have rules that you set. And there is a very fine balance. It's a tightrope walk to both be diligent about following the rules and then also have the flexibility to adapt to new market conditions. Two things that we just talked about here. So if you're constantly looking at a daily chart as a part of your trading approach, and you get into these wild swings, yeah, just keep looking at the daily chart, but you got to back up and look at the weekly as well. If you're using a weekly option and all this volatility gets crazy, look at using the next month out. So give yourself a little bit more time. And those are things that you can really test if you're take a small trade and test it, take a very small position, see how it plays out, or do it while you're on the sidelines and just paper trade and check it out, see how it works. And that'll allow you to adjust your rule with information, not emotion. So big thing is to make these based on facts and uh, the information you get. So we got everybody's kind of chiming in. Carlo, great to have you on here. This is good stuff. I'm glad you're joining us. He's relatively new to trading and he's looking for as much education as he can get. We're trying to cover tips. There is a lot more to learn, folks. Don't ever think that you know it all. Keep learning and trade wisely. Those are that's my mantra, and I couldn't emphasize it more. Um, cool, Wendy. Was there anything else that you wanted to show us?
Um, not right off. I just actually click the refresh button because I realized that the market actually is opened.
Well, there
And
you go.
so
Right, and sure
so I
enough, look at
just
that.
clicked to see what had happened, and it did um, go up a little bit here, heading up here
Yeah,
toward that 55 EMA. Should we look and see what has happened on open?
sure, absolutely.
Let's
Let's
see.
take a
There we
look.
go.
And
So the
folks,
Dow
while we're
is,
full,
yeah, so the
well,
Dow
well,
is gapped up 248 points. The Nasdaq is up 161. The S&P is at almost 36, and the Russell and I'm looking at the percentages here, and the Russell is up the highest percent. It's up a
right.
dollar 91, but it's up
Per
97.97%.
Yeah,
So
perfect timing because we talked earlier about your one ticker service that you have and extending that discount. I'm dropping the link to that extended discount. Now, this is going to end at midnight tonight. And I begged for this for the live audience, folks. So hopefully this will be worth it. I want you to take advantage of this. We really, it's never been available at this price before. I think it's like half of the normal price for a very limited window, and we got it extended for this audience. So hopefully you can jump on that and take advantage of it. I just posted it in the chat. So if you open your webinar chat, you'll be able to click on that and grab it. But as Wendy mentioned, you can look at this and you can say, look, all the indexes are correlated; they're all up. Um, it's not the same. They're not, they all act a little bit differently. They all have their own personality, and that's what makes this really cool. And the one ticker service uh, is great because it knows the Russell, looks at the Russell, uses the P3 approach on the Russell specifically, and it simplifies it and it makes it really easy. That's the thing that is just spectacular about that service.
another little advantage to it is the fact, as far as these four indices, is it is the least expensive, so that you are really often in a position for the same investment that maybe you could buy three of the Russell compared to one of the Dow or the Nasdaq or something, as far as contracts, with for the same investment.
Right.
And that is an advantage.
It's accessibility is what it is. Both,
Correct.
again, if you're a pro, you can get a little bit more bang for your buck. If you're new, you can get in with a little bit more less capital at risk. Uh,
Hmm.
uh, that's a great way to learn. Great way to learn and get that. Well, we can see if anybody else got any more questions before we wrap. I just wanted to thank you, Wendy. I know you got a lot going on, and you're in this all day long. This is not like something that
Yeah,
you check
no,
in
I'm
occasionally.
like glued to the computer all day.
I know. I can't even imagine because I know the kind of what comes out of there, just the result, but the amount of information that you have to process, you and your team and everybody, just mind blowing. And so to be able to have you carve out time and sit down with us and have this chat, I'm so grateful. Really appreciate it. And I'm just going to extend the invitation now. I hope I can have you back soon. I'm hoping that we're going to get more and more people tuning into these on a regular basis, and we can give them some updates. And maybe we'll get you back sooner than later and follow up on how all this stuff is doing.
That would be great. That'd be awesome. I'd be up for that.
Awesome. Well, I do have one more question, and uh, looking here. Yeah, so this is a great question. Before we wrap, and I want to, again, it's about the question, so I want to cover this. Nick is asking, what percentage of your account do you risk on one trade? And I know it can fluctuate, so let's just reframe that question a little bit. Nick, forgive me if I'm messing it up, but what's the rule of thumb that you start with? You know,
I For starting, I I have always sort of advised somewhere between no more than 10 or 15% of your account. So just for easy math, that uh, if you had a $5,000 in your account, that you would do 500 or 750 kind of as tops into each trade. And that has just always kind of been my guideline. To me, if the worst of the worst of the worst happened and you lost that, you would still be okay as far as having a trading fund and being able to say, okay, I learned something, and be able to continue and move on. If you were to invest half of it or three-quarters of it or the whole thing into one trade, that would, and have it not work out, that would be awful.
You know, another method that I've heard that makes sense uh, is say, all right, look at your track record. Let's say you're just starting trading and you've been doing paper trading for a while. Pick 10 trades. How many did you win and how many did you lose? Let's say you
Mm-hmm.
lost three and you won seven. That's great. You lost three out of 10. So that's 30%, right? You need to be able to afford to lose at least 30%. What I would say is double it. So you don't ever want to be at risking more than double your losing percentage because you got to get through those losers to get back in the game. And if you do that, that's a little bit more, it gives you a little more latitude. And so I think if you combine those two things where you say, look, let's start with like a 10% position size, but I don't ever, and you know, if you're asking about one trade, one position, you could take 10% in that position, 10% in another. Couple that with kind of the approach that I was mentioning, where you just don't want to get too far ahead of yourself at any one time and have too many trades open and watching it. So you kind of combine that stuff. I think that that's worked well, at least what's worked well for me. Interested in any other, what everybody else is doing, but yeah. So, hope that answers the question, Nick. Thanks for chiming in on that. All right. Well, we are a little bit over time, actually. I was hoping to try to keep this quick, but there's too much to cover, so it was a blast. Wendy, we're going to go ahead and wrap up. I did put that link in
Okay.
there. Just kind of let everybody know. I'll shoot a message out to all the attendees with a link to all this stuff so that you guys have access to all the different things that we talked about in here. Keep an eye out for our eye opener schedule. Keep an eye on Wendy's stuff. It's amazing. She's amazing. We're very grateful to have her time. And thank you, all of you, for your time this morning as well. So great. Well, Wendy, I know you're traveling, so hope you enjoy the trip and have a great time.
Thank you. I appreciate that very much. And I'm working, but different atmosphere. So that is nice. Just instead of the mountains, we're got the beach. So
Yeah. I don't think you can lose with either one. So
nope.
that's awesome. All
Yeah.
right. Well, take care and we will
Thank you.
talk to
This
you
was
soon.
fun.
All
I
right.
appreciate
Bye-bye,
it.
everyone.
Take care.